Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Ichor Holdings Ltd. Annual Report. Ichor Holdings Ltd. offers a diverse range of businesses and services that cater to the semiconductor industry. The company's primary focus is on designing, engineering, and manufacturing fluid delivery subsystems and components for semiconductor capital equipment. The company provides gas and chemical delivery systems, which are essential in various semiconductor manufacturing processes, such as etch and deposition. These systems deliver, monitor, and control gases used in these processes. Additionally, Ichor Holdings manufactures precision machine components, weldments, electron beam, laser-welded components, and other proprietary products. The company's product offerings also include surface treatment technologies, precision vacuum and hydrogen brazing, and chemical delivery subsystems that blend and dispense reactive liquid chemistries used in semiconductor manufacturing processes. These services are primarily marketed to equipment OEMs, original equipment manufacturers, in the semiconductor industry, with a significant presence in Japan. Overall, Ichor Holdings businesses and services encompass a wide range of products and technologies that support the complex manufacturing needs of the semiconductor industry. Unfortunately, I do not have access to the text you provided. However, I can provide a general template for an overview essay on what may cause a stock price to increase significantly. The stock price of Ichor Holdings Ltd. has increased significantly in the past year due to several key factors. One major contributor is the company's strong financial performance, which has led to improved earnings and revenue growth. This has resulted in increased investor confidence, driving up demand for the company's shares. Another factor contributing to the increase in stock price is the company's strategic expansion into new markets and industries. Ichor Holdings' ability to adapt to changing market conditions and capitalize on emerging trends has enabled it to expand its customer base and increase revenue streams. Additionally, the company's commitment to innovation and research and development has led to the introduction of new products and technologies that have resonated with investors. This focus on innovation has not only driven growth, but also positioned Ichor Holdings for long-term success. Furthermore, the company's strong leadership team and governance structure have been instrumental in driving growth and improving investor confidence. The board of directors' strategic decisions and the management team's execution have all contributed to the company's success. Overall, a combination of strong financial performance, strategic expansion, innovation, and effective leadership has driven the significant increase in Ichor Holdings' stock price over the past year. Ichor Holdings Ltd. market capitalization of $2 billion is materially smaller than most of its industry peers of roughly $8 billion. Ichor Holdings Ltd. trades at a lower price-to-book ratio of 2.61 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company maintains a moderate leverage profile, with liabilities making up 30% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline for a company can be attributed to several key factors. On the positive side, outsourcing by original equipment manufacturers, OEMs, to specialized suppliers has led to increased revenue. The expansion of addressable markets through technology and products has also contributed to growth. Additionally, long-standing relationships with top-tier OEM customers have been beneficial in driving revenue. Furthermore, an early customer engagement approach has enabled the design of precise specifications, resulting in increased revenue. the industry's increased spending within the semiconductor capital equipment sector has also led to higher demand from customers. Conversely, factors such as competition from other suppliers and internal manufacturing groups of OEMs, intensified price-based competition, introduction of new products or technologies by competitors, and entry into new markets leading to new competitors have all contributed to revenue decline. Other external factors that may impact revenue growth include foreign currency, exchange rate fluctuations, interest rates, and changes in the value of the US dollar relative to other currencies. These factors can either positively or negatively affect a company's ability to compete in the market. The changes in net income and profit margins over the 3-year period were significant. Initially, net income decreased from $43 million in 2023 to $20.8 million in 2024 due to reduced gross margins and increased liability risk. However, this trend was reversed in 2025 with a slight increase in net income to $52.8 million on a GAAP basis. Profit margins also underwent a transformation during the period. Despite an initial decrease from 1.9% to 2.1%, they significantly improved to 3.8% by 2025. This improvement was attributed to various factors, including increased revenue from $811.1 million in 2023 to $947.7 million in 2025. The reasons behind these changes were multifaceted and complex. Increased competition, pricing pressure, and reduced market share contributed to the initial decline in net income. Additionally, potential trade sanctions and regulatory retaliation posed a threat to profit margins. However, by 2025, the company had likely implemented strategies to mitigate these risks, leading to an improvement in net income and profit margins. The company's financial performance is a testament to its ability to generate positive operating cash flow. According to the provided data, the company has consistently produced significant amounts of cash from its operations over the past 3 years. In 2025, the company generated $29,886 million in cash from operating activities, indicating a steady level of profitability and efficient management of resources. This figure is slightly lower than the previous year's total of $27,880 million, but still demonstrates a strong ability to produce cash from its core business operations. The most notable aspect of the data, however, is the significant jump in operating cash flow between 2023 and 2024. With a total of $57,632 million generated in 2023, it appears that the company experienced a substantial increase in profitability or efficiency during this period. This surge in operating cash flow suggests that the company's management team was able to implement effective strategies to improve its financial performance. Overall, the data indicates that the company is generating positive operating cash flow, with significant amounts of cash being produced from its core business operations over the past 3 years. The company's financial situation has undergone some changes over the past year. A closer look at the data reveals that the debt level has decreased slightly from $121,023 on December 27, 2024, to $117,278 on December 26, 2025. This decrease is a result of the company's efforts to manage its debt. In addition to the reduction in debt level, interest expenses have also seen a significant decline. The interest expense net decreased by 28.6% from $9,266 in 2024 to $6,620 in 2025. This decrease is attributed to lower weighted average borrowings and borrowing rates. Overall, these changes indicate that the company has made progress in managing its debt and reducing its financial obligations. Management at Ichor Holdings Ltd. is optimistic about the company's long-term prospects despite operating in a cyclical industry prone to risks and uncertainties. To adapt to evolving customer demand and drive operational efficiencies, the company has initiated a geographic footprint rationalization plan that will be implemented by 2025. The business model of Ichor Holdings Ltd. is designed to be flexible, with a variable cost structure that allows it to adjust to increased demand without significant additional capital investment. This flexibility enables the company to expand production volumes during periods of growth while avoiding excessive fixed costs during cyclical downturns. In terms of strategy, management is focused on investing in research and development to meet customer demands for new products, expanding its markets and international operations, and managing its cost structure to remain competitive. As a result, selling expenses and general and administrative expenses are expected to increase as the business grows. Overall, Ichor Holdings Ltd.'s strategy is centered around adapting to industry trends, investing in innovation, and optimizing its operational efficiency to drive long-term growth. The company's acquisition and divestiture activities have been identified through various summaries. In terms of acquisitions, there is no mention of specific deals or amounts on pages 1-23. However, it is mentioned that the company has made business acquisitions in the past without specifying any figures, page 50. Additionally, the company has a history of acquiring strategic businesses, page 17, and may continue to do so in the future by acquiring businesses, products, or technologies that are deemed strategic, page 17. On the other hand, the company has also engaged in divestitures. Specifically, it is mentioned that facilities have been closed in Scotland and Korea, page 41. This indicates that the company has been actively involved in shedding non-core assets to streamline its operations and focus on more strategic areas of growth. Concerns about inventory buildup and supply chain disruption. The extracted summaries reveal several concerns regarding inventory buildup and supply chain disruption that could impact Ichor Holdings operations. One of the primary concerns is the oversupply of products, which has led to decreased demand for capital equipment due to inventory digestion at customers, page 13. Additionally, high inflation and elevated interest rates may cause customers to push out or cancel orders, further exacerbating the issue, page 15. Inventory buildup is also a concern, with potential excess or obsolete inventory charges resulting from acquiring products in excess of demand or that do not meet customer specifications, page 17. This can lead to increased costs due to unusable inventory and delays in product introductions and shipments, page 18. Supply chain disruptions are another significant concern, including labor disruptions at facilities, natural disasters, terrorism, pandemics, and other catastrophic events that could damage facilities, delay production, and disrupt supply chains, page 23. Tariffs and trade sanctions can also affect global demand, while the phase-out or ban of certain substances, materials, or processes may impact sourcing and supply of materials used in manufacturing products, pages 28-29. Furthermore, disruptions or delays in the manufacturing of products or in the supply of components or raw materials can occur due to various factors, including decreased margins for several quarters following the introduction of new products, page 33. Ongoing negotiations regarding reciprocal tariffs and national security-based trade measures, export controls, and regulations aimed at restricting access to advanced semiconductor technology in China also pose a risk to supply chains, pages 41-43. The company's inventory valuation and impairment costs also indicate potential issues with excess and obsolete inventory. The quarterly assessment of inventory value with write-downs for excess quantities or obsolescence is a significant concern, with inventory impairment costs totaling $19.8 million in 2025, page 47. Overall, these concerns suggest that Ichor Holdings may face challenges related to inventory buildup and supply chain disruption, which could impact its operations and financial performance. That concludes the financial summary for Ichor Holdings Ltd. Feel free to comment below, and I will be happy to answer them when possible.